I missed my chance to be an early adopter of Bitcoin. In the summer of 2013, my wife and I moved back to the US after having lived overseas for a couple years. And one of the things I did early that fall was build a desktop computer for the first time. As I was researching which parts to get, like the power supply, the CPU, the solid-state drive, etc., I was trying to decide on a graphics card, and I noticed that a lot of the blogs and forums were saying that you can mine Bitcoin with certain NVIDIA graphics cards. So I had heard about Bitcoin just a bit in the news before that, and I was intrigued that maybe I could earn money somehow mining Bitcoin on my PC, whatever that meant. So I don't remember this well, but after I built the computer, I remember I did spend a little bit of time trying to figure out how to create a Bitcoin wallet. And basically it was more complicated back then than it is now. Now we have a simple GUI interface, and it's pretty easy to set up wallets on a mobile device or a computer. But back then it was more complicated than it is now, and I gave up because I couldn't quickly figure it out. I don't even remember it that well, but who knows? If I had understood how important it would be, within a few years, I'm sure I could have just stuck with it a few more minutes until I figured it out. Looking back now, in hindsight's 2020, it's easy to see that was a mistake. But of course, at that time, no one knew that magical internet money, as some were calling it then, would end up becoming so valuable in less than a decade. If you look at this price chart, I could have bought 10 Bitcoin then for under $1,000 total, less than $100 each. And today, those 10 Bitcoin would be worth more than $500,000 US. So imagine how many more I would have if I would have gotten into Bitcoin mining. So if you look at the chart, like right at the end of 2017, the price shot all the way up to 17,000 per Bitcoin. I hadn't really been following it for those 4 years, but basically, it was starting to make headlines again as the price was going up. And since I had never taken the time to understand it, I was still dismissive. I was just biased against it as a foolish investment, or a kind of a worthless magical internet money. And so I was dismissive. I even compared it on Facebook to the Tulip Mania instead of researching into it more and trying to understand it better and why people thought it was important. When the price fell, in 2018, after a spike for a couple months, that just confirmed my uninformed biases, and I kind of haven't really followed it even that closely again until last year, which I'll get into. So last year was different, and it forced me to finally do the work and take the time to learn and to understand Bitcoin, and I couldn't dismiss it any longer. COVID basically accelerated the case for Bitcoin, as I'll explain in this video. So, with the extremely contagious coronavirus that severely impacted our societies and scared our leaders so much that they shut down major aspects of our economy, this led to massive unemployment and business closures, which led to massive stimulus bills to try to keep the economy from collapsing. The Fed expanded the monetary supply at rates we've never seen before. And all of a sudden, tons of people, including me, were worried that it seemed inevitable that this would lead to inflation. Of course, this led to tons of memes too, like the money printer go burr meme. And then I saw a social media post that said, Bitcoin is a hedge against inflation. And I didn't understand how that could be, since I had never understood Bitcoin, but it piqued my interest enough that I decided to finally take the time to do the work and learn what Bitcoin is, how it works, and why it might be useful as a hedge against inflation, which never seemed as important during my adult life as this past year, as I was watching all of this spending and the debt increase. So this incredible rise over the past 6 months in Bitcoin's price, and even throughout the past decade, raises the questions. Is Bitcoin really a hedge against inflation? Why? Why is Bitcoin's value increasing so dramatically? And how does Bitcoin technology work? Is it reliable and secure? Can we trust it? Can we actually use Bitcoin as money? So I'm going to try to answer some of those questions here. This brief introduction video is meant for someone who doesn't really know much about Bitcoin, but is interested in starting to learn more. So using simple terms, I'm just going to explain the bare basics of the technology behind Bitcoin and some of its most important features, and why some of those, in my opinion, are beneficial for you, for me, and for the world, especially compared to fiat currencies like the US dollar or the euro, and how Bitcoin benefits us. Then, after you watch this video, I've written a guide with 2 parts. The first part is full of resources to help you learn more: essays, articles, videos, podcasts, and book recommendations. And the second part walks you through how to create a Bitcoin wallet, how to buy Bitcoin, how to send Bitcoin, and how to hold Bitcoin and keep it secure, and perhaps even earn interest on it if you want. So, Bitcoin started in 2008 when a pseudo-anonymous developer who went by Satoshi Nakamoto published this 8-page white paper, Bitcoin, a peer-to-peer electronic cash system. In it, he explained how the technology would work. He posted it to a few forums and websites of developers, hackers, and especially a group called the Cypherpunks, which was the first group to adopt Bitcoin. And then on January 3rd, 2009, he mined the first block of the Bitcoin blockchain called the Genesis block. And embedded in the Coinbase of this first block was the text, "The Times 03 2009 Chancellor on brink of second bailout for the banks," as you see up there. This was a headline from the Times. The Times is a leading newspaper in the UK. And right after the stock market crash of 2008, which shows that this idea that central banks and fiat currency and fractional reserve banking, which are 3 hallmarks of our current monetary system, are flawed. And it seems from this and from some of Satoshi's early writing that we still have records of, that fixing this corrupt system was his primary goal for Bitcoin. We don't know who Satoshi Nakamoto is. Maybe it was a single person, maybe it was a group. We don't know which country he was from. He never revealed his identity. While he continued developing source code and contributing to the forums for a few years in the early days of Bitcoin, we still don't know today who he was. It may have, this person or group obviously was very competent across a wide range of disciplines, which include computer engineering, cryptography, encryption, economics, human psychology, and game theory. Soon, other developers started downloading his open source code and began running their own nodes on the network and mining Bitcoin, and it began to grow. You might have heard of the first exchange where you could buy Bitcoin called Mt. Gox, or the guy who bought 2 pizzas with 10,000 Bitcoin back in 2010. Its price has gone from fractions of a penny to over $50,000 per Bitcoin, making it an asset worth over $1 trillion in market cap recently. It just recently passed that a few days ago. In 2017, I actually had a few social media posts likening it to the tulip bulb mania, but in the past year, I've changed my stance on that. So let me explain a few key features of Bitcoin. So first, importantly, its code is all open source. And what that means is that any programmer, including me if I wanted to, even though I don't really understand code, anyone can look at the code and verify what it does. So this gives a level of transparency that you don't get with closed systems, like with a lot of the services that we use. And so, you think of like the Fed and how secretive they are, and they're the complete opposite of transparency. So recently, Jerome Powell, the chairman of the Fed, has had a few press conferences and Senate hearings, and the entire market, in fact, investors all over the world are waiting to see what he's going to say. Is he going to raise interest rates? Is he going to encourage them to use certain monetary policies? Is the Fed going to do anything different? And no one knows what he's going to do. And the way he changes it can have a huge impact on the market. This is completely different than Bitcoin, where it's completely transparent. Everyone knows what it's going to do, and it's not going to change. It also has a fixed supply of 21 million Bitcoin. So this is important when you consider inflation. I'm going to make the argument in this video that naturally and historically, all fiat currencies inflate the monetary supply, which causes prices to go up, which means that all your earnings and savings are going to lose purchasing power. With Bitcoin, it's different. There's never going to be more than 21 million Bitcoin. It's written into the software code. It's been validated by tons of auditors and programmers, and it's not going to change. So no one's going to inflate it. No one can manipulate it. One of the other neat things about it too is it has a public ledger, which is called a blockchain. So this has become a buzzword, mostly due to Bitcoin's success. But a lot of times it's used as like marketing hype, and it's not and most of the time their products are not a true blockchain. But for Bitcoin, what it is about every 10 minutes, there's a new block that of recent payments that people have made. So like if I'm sending you a payment with Bitcoin from my Bitcoin wallet to your Bitcoin wallet, that's going to be recorded on this public ledger. Then it's going to be mined, and I won't get into that in this video. You can look up Bitcoin mining if you want, but basically mining is solving a very difficult math problem. They call this process proof of work, in order to confirm that all of these transactions are accurate, that I did have funds in my wallet that were previously sent there on this blockchain. Anyone running a node is going to have a copy of all of the Bitcoin transactions ever, and then they're all confirmed, that they all confirm also that I'm sending you this payment. So like right now, I'm actually running a Bitcoin node on my desktop computer here in this room, and every 10 minutes it validates, along with millions of other nodes, millions of other computers running the same software, confirming all of the payments around the world that have just been made in the past 10 minutes on the Bitcoin network. So when you have open source code, a fixed supply, a public ledger blockchain of all the transactions are, and so in other words, no one can commit fraudulent transactions. So the way that he designed this is so secure that it's actually never been hacked. So some of the services that rely on Bitcoin have been hacked, but the Bitcoin network actually hasn't. One reason why we can kind of trust the security of it is by understanding this SHA-256 function, which is basically a encryption developed by the NSA, and it's actually used really commonly on the internet and in our banking system, and so Bitcoin's not the only one that uses it. Basically, with the SHA-256 encryption, it's very easy to create a one-way encrypted message, but it's impossible at this point to reverse engineer it. So with Bitcoin, it's kind of like your password. You have your private key, and that gives you access to the funds in your wallet. So it's going to be a series of words, usually about 24 words, and so you just write it down on a note card, and then so this is a picture I have of it that someone had done a demo on YouTube of it. So this is a screenshot of that. So those 24 words are basically like his password. He explained in this video that he's going to destroy his wallet after this, and he's never going to use it. But it's just to show a demo to help people learn. And you never want to show anyone your wallet, and people actually recommend not even storing it on your computer, because your computer can be hacked, and then if your keys are on there, then they can have access to your Bitcoin. So they recommend making a copy of this, maybe making 2 copies of it so you have 3 of them, and storing them in a secure place where no one else will find it. Maybe you would leave it with a trusted person. And so the SHA-256 function, those whether it's like a mobile wallet on your phone or on your desktop, or in this it's a hardware wallet. Those are the 3 types of wallets basically, and that gives you access to the funds, but then it creates this public hash like what you see here at the bottom. So these are not my keys. This is just a demo, but this actually is an address for one of my Bitcoin wallets. And so anyone watching this can send funds to this wallet. And so the amazing thing is with the Bitcoin network, if you want to send something to my wallet, no one in the world can stop you. So Bitcoin's a completely open network, and there's no middleman really. So it's completely decentralized. So it's not like, MasterCard, Visa, PayPal, banks, the government can all stop you with our normal payments right now. Well, with Bitcoin, it's from my wallet to your wallet, and no one can stop. So it's censorship resistant. And then, just one other important thing to keep in mind is, since the blockchain is completely public, so there are like websites like blockchain.com that kind of keep track, and so basically you can put this wallet into blockchain and you can see all the transaction history of that wallet. So it's something to keep in mind for privacy. No one knows for who, when you create a Bitcoin wallet, no one knows whose it is, but if you find out whose it is, you can look up their transaction history. So it's something to keep in mind. Later, I might do another video talking about Bitcoin privacy, and how to use different addresses and stuff. I'm still learning about that. So, Satoshi Nakamoto saw a major problem with central banks, several of them actually. And so here's some in my words, and then I'll explain how Bitcoin probably fixes a lot of these. So one is inflation and hyperinflation, and the debasement of currencies, which is kind of like a hidden tax. During the Roman Empire, when gold coins and silver coins became, standards of monetary payments, the Roman government needed to fund their wars, and so what they started doing is they started issuing coins that weren't actually solid gold. They were a cheaper metal plated in gold. And so this was a way that they were able to debase the currency, and for a while they were able to get away with it, but then as people caught on, the value of the gold coins dropped because they weren't solid gold. Well, something similar happens when the Fed just begins to print more money with fractional banking, when banks just issue loans that with money that they don't have. This increases the money supply, and it also debases our currency. In a lot of ways, central banks can manipulate the financial system, often to benefit the government, even if it hurts the citizens or other nations. It incentivizes debt because with fractional reserve banking, it makes it just easier to get money in loans. But then also, once there's a lot of debt, either both by the government and throughout the society, then the government wants to gradually inflate the supply to make it easier to pay off the debt, which is just a downward spiral. And then there's another important aspect too, that it actually causes inequality to persist. And this is something that a lot of people don't understand. If you want to look it up, you can look up the Cantillon effect, and but this is something which Bitcoin can actually help with, because since the Bitcoin has a fixed supply of 21 million Bitcoin, it can't be inflated, it can't be manipulated. You can't deposit this bank. You can't say, oh, that corporation is too big to fail, and just issue them tons of new money that you just created. You can't do that with Bitcoin. And so it protects that aspect of central banks that benefits the wealthy, the powerful, and the banking system. So this is kind of crazy, but throughout history, all fiat currencies trend to zero. So according to one study of 775 predominant fiat currencies, not a single one held its value over time. The average life expectancy for a fiat currency has been only 27 years. 20% failed through hyperinflation. The British pound sterling is currently the oldest fiat currency in existence, at a ripe old age of 317 years, and it must be considered a highly successful currency. However, success is relative. The British pound was defined as 12 ounces of silver, so it's worth less than 1/200th or 0.5% of its original value today. So in other words, the most successful long-standing fiat currency in existence has lost 99.5% of its value. So at the bottom here is is a photo of a $100 trillion bill from Zimbabwe, a fiat currency which suffered tremendous hyperinflation. And you've probably heard about the hyperinflation that happened a century ago in Weimar, Germany, or over the past decade in Venezuela. So that photo in the corner shows how much cash is needed to buy a roll of toilet paper. Basically, it's cheaper to just use cash instead of toilet paper to, And I've heard stories of Venezuelan workers getting paid, and by the time they walk directly to the grocery store to buy food, they've already lost purchasing power of their earnings. So, since 1776, America has had the same constitution, but we haven't had the same currency this whole time. We've actually had two other central banks, different than the one we have now, and both of them failed. And so this third one was created in 1913. 20 years after that, the U.S. banned ownership and use of private gold. And since breaking its peg to gold in 1971, the U.S. dollar has lost over 96% of its relative value. Nixon said that it'd be a temporary removal, but of course, debt and spending got out of control, and we're never going back. Basically, the dollar, as we know it, has only existed for about 50 years. Compared to Zimbabwe or Venezuela, our currency is very stable. In fact, in those countries, many will try to use U.S. dollars as much as possible to preserve their purchasing power compared to those nations' currencies. We can be thankful our currency is more stable than theirs has been. But what if Bitcoin ends up being a hedge to inflation compared to their currencies? So check this out. When you consider what happens to your cash savings over time. Okay, so let's do the math. Let's assume you are retiring. You've saved up a nest egg of $100,000 in cash, just to start with an even number to make it easier to do the math. Now let's assume that we are seeing a steady 2% inflation every single year for 30 years. What happens to the purchasing power of your savings? After 1 year, you lose 2% of the purchasing power due to inflation of your $100,000. So you lose $2,000 in purchasing power. Then the next year, you lose 2% of what was left from the previous year, etc. And as you continue year after year, losing 2% of what you had the previous year, you end up with losing almost half of your purchasing power over 30 years. So I won't even get into the analysis of debt, which is another big concern to be aware of, but both at a global level and a national level within the U.S. But in absolute terms and compared to GDP, we're seeing unprecedented levels of debt with no end in sight. So another interesting thing to think about is that the dollar has basically functioned as a global reserve currency for the past 100 years or so. Now, it's super interesting to look at this chart and realize that throughout history, global reserve currencies only lasted around 80 to 100 years before a new one took its place. Because, like we established, fiat typically goes to zero, or wars overthrow the most powerful empire. I don't think the Fed is going to disappear anytime this decade, but it's worth thinking that through American history, we've had 3 different central banks. The first 2 failed, and the dollar system as we know it has only been around for 50 years. And that's not a very long time, actually. And it's crazy because Bitcoin is 11 years old, the dollar is 50 years old. What could be the next global reserve currency? Really, there are only like 5 options. So, 1, the dollar continues to win. 2, perhaps the Fed will develop their own digital currency that'll kind of replace the dollar. So it would still be a U.S. currency, but it might be a new one. Maybe the Fed coin. I don't know what they would call it. Perhaps we will revert back to a gold-pegged currency, but I doubt it because the government loves being able to print money. That's a special power for them, even though it harms us. And then 4, one other option, which I'm not too excited about, but it does seem possible, would be the Chinese digital Yuan. China's going to be the first state to launch their own state cryptocurrency. They've had successful trials, and their technology seems to work. They're probably going to be launching it within about a year or so. They're through stuff that their leaders have shared, they do want to be clear. They don't want to have to develop businesses within the American legal system and the American financial system. They want to do it within the Chinese system. 5, I think it's possible that Bitcoin could actually be the next global reserve currency. Bitcoin could be the underlying layer of the future monetary system due to its transparency, neutrality, reliability, and decentralized network, and the ability to build different layers upon it. So basically, as I finally went down the rabbit hole back in August, I finally started to learn all about this. And so I remember I actually had this idea, like how a path for how Bitcoin could basically kind of take over the world, and we could see like mass adoption. So basically, the vision I had, okay, like first, there's already a bunch of retail investors. That's kind of like the term that they use for like small investors like me that, buy Bitcoin by, $20, $100, $1,000 at a time. Or millionaires and billionaires who buy it at hundreds of $1,000s at a time, or even millions or billions at a time. So seeing just adoption by individuals, both, average people and wealthy individuals. Seeing more small businesses and even large corporations hold Bitcoin on their balance sheet. Seeing hedge funds, pension funds, and insurance funds start to make it like 1%, 5% of their portfolio. City treasuries, national treasuries, sovereign funds, some of these are massive, and if Bitcoin is a hedge against inflation, a lot of them already have multiple currencies in their treasury, so might as well add Bitcoin to that. More merchants accepting Bitcoin as payments, just the more it's used, the more valuable it is. More Bitcoin integration with PayPal, MasterCard, Visa, Apple Pay, Google Pay, Amazon, traditional banks. And then perhaps a small nation or two would peg its currency to Bitcoin instead of to gold or the US dollar. That could be the path to the next global reserve currency. So anyways, back in August, I finally started buying Bitcoin a little at a time. I wasn't like some people where I sold my house. But, so anyways, what started to happen like right after I had this was actually really similar to what I thought could happen. So I'll share some of the headlines with you, but at that point, I was not confident in my understanding of it. And so basically, so adoption did continue. So there's ways to analyze the blockchain, and so these people that do this are seeing tons of new wallets being created, both on exchanges and even off exchanges where people are planning to hold it long term, probably. And there's been leaks of some millionaires and billionaires who've been buying it. 2, small businesses and even large businesses have started buying. So there are a lot of small businesses and privately owned companies that have been holding Bitcoin for a long time. One of the first publicly traded companies to do it at large scale was MicroStrategy. It was a company I had never heard of, but kind of a smaller enterprise software company. And their CEO, Michael Saylor, had been worried about inflation as he saw the massive spending unleashed via the stimulus bills and other spending. And as he began to study inflation more, realizing he needed to figure out a way around it. And after concluding that gold, real estate, cash, sovereign debt, stock equities, they all had major drawbacks, he went down the Bitcoin rabbit hole and concluded that Bitcoin would probably become worth much more money. And due to its absolute scarcity of 21 million Bitcoin, it would never be inflated. And it would make for a perfect corporate treasury asset that would last for years and even decades. He also recently hosted an event called Bitcoin for Corporations where tens of thousands of people attended, including thousands of executives and many CFOs and board members who shared that they are planning on also adding Bitcoin to their balance sheet of the treasury reserves of their companies. Square bought Bitcoin, which makes sense since with their app, Cash App, they actually do support Bitcoin, and that's a great place to actually start buying Bitcoin, actually. Marathon is a Bitcoin mining company that's publicly traded, and they make sense that they're adding Bitcoin to their balance sheet. And then the biggest one is Tesla bought $1.5 billion in Bitcoin, and they are even going to be accepting Bitcoin as payment for their cars. So, a few years ago, people were saying, you can't even buy Bitcoin with anything. Well, soon you're going to be able to buy a Tesla with a Bitcoin. Who knows? Maybe by next year you'll be able to buy it with half a Bitcoin or a quarter of a Bitcoin. We'll see. Then institutional investors are starting to get involved too. And, the thing is, like, the amount of money that, like, 1% of their portfolio or 5% of portfolio is just, I'm not used to dealing with those numbers. But some of the big investors are starting to understand how powerful of an investment it could be. And, it could be something where FOMO causes it to just, fear of missing out causes it to just, continue to grow as all of these huge funds decide to buy it. A lot of big funds already do have it. So Harvard, Yale, Brown endowments already have it. Mass Mutual is putting it on their balance sheet, and there are rumors of others doing that as well. And public pensions have started to do it even. And they're, firemen, teachers, there's some big public pension funds out there. And so some of them are probably going to be holding Bitcoin. So the thing is, as a lot of these funds start to hold Bitcoin, it's going to cause the price to go up, but it's also going to cause it to be more stable. So there has been a lot of volatility in Bitcoin's price, but this is, part of the thesis for the Bitcoin bulls. No one knows for sure what's going to happen, but we're seeing cities and other state governments start to get involved with it. Miami's mayor is like really pushing it. Swiss government is very friendly to crypto and to Bitcoin, and one of their cantons, like a province, is going to accept taxes in Bitcoin. Same with an area in Dubai in the UAE. More and more merchants are accepting it. So Overstock.com, Microsoft, for Azure Cloud, they've already accepted payment in Bitcoin for years, and many others are starting to integrate it into their website as an option to pay. And basically, as Bitcoin gets more widely adopted, more and more merchants are going to accept Bitcoin. More and more of them are going to start holding on their balance sheets, which means they're going to be promoting it more, which means that they're going to, and so it's just going to continue to grow. PayPal just integrated Bitcoin into their services, and the usage from their users immediately was massive, and they're planning on expanding upon that this year. MasterCard and Visa launched API development so that its merchants will be able to accept Bitcoin payment soon. So if Bitcoin and MasterCard are a part of it, that's going to be any merchant that accepts credit cards is going to be able to accept Bitcoin. Apple just integrated the BitPay credit card into Apple Pay, which enables credit card payments to be drawn from your Bitcoin holdings. Amazon is hiring for cryptocurrency development in Mexico, according to recent news. I'm not sure if Apple, Google, or Amazon will be the first to actually integrate Bitcoin into their payment services, but so far, everyone who has done it has seen incredible growth among its users. And then a lot of the traditional banks are starting to get involved with it because all of their clients are asking them, "Hey, I want Bitcoin in my portfolio, but I want you to, custody it for me." So, this adoption that I started to think could happen actually started to happen, before I even fully understood Bitcoin. This has all just happened since August. So with these last two bullet points happen? I don't know. Seems like Argentina or Nigeria could be an option. Argentina has had major hyperinflation issues with their currency over the past couple decades. Nigeria would be a good one. Over 30% of Nigerians already own some Bitcoin, and their Senate was just debating how Bitcoin's value is going up while their currency is going down. So instead of pegging their currency to gold or the US dollar, maybe peg it to Bitcoin. Will Bitcoin really unseat the US dollar as a global reserve currency? I'm not sure. I don't think it'll happen within the next decade. I think for a while we'll see both of them and just being used in parallel as Bitcoin's adoption and market cap and price just continues to go up with some volatility. That's just part of the beast. But I guess it depends. We don't know for sure what kind of inflation we're really going to see, and we don't know for sure what's really going to happen with Bitcoin yet. But here's something, I guess I want to ask you to think about. So I gave up on Bitcoin. I could have been an early adopter, but I didn't do the work. Back then, the Bitcoin price was really low. So from an investment standpoint, I could have made a lot of money on it, but it was harder to work with, and it was riskier, and no one knew for sure that it was going to become a thing. So then we could say for the next 6 years, it's easier. Developers start making the wallets and a lot of these services more intuitive and easier to use. The price is higher, so the returns in the investment aren't quite as big, but they're still very big, bigger than any other investment just about. And but the risk is also a little bit lower, but still very high. Well, I think now, after all the things that I just described, all the headlines, it's inevitable that Bitcoin adoption is going to continue to increase. Governments can diminish the demand for Bitcoin by penalizing it in certain ways if they wanted to, but they can't stop it. But I think that the political pressure is just too great to stop it because, especially in America, there is a ton of financial growth potential to lean into this. And if the U.S. government tries to stop it, a lot of that development is just going to happen outside the U.S. So I think it is going to happen here. So I think the risk is so low now. I mean, granted, there's volatility in the price, but I think if you think 5-10 years out, it seems like it's inevitable that Bitcoin will just continue to go up as it gets more widely adopted. It's also much easier to use now than it was in the past. I put together a guide that'll help you get started with creating a wallet, buying Bitcoin, thinking about the best way for you to hold Bitcoin, and in the future, it'll be fully integrated. I mean, you won't even have to think about it. It'll be fully integrated into every payment system, but the returns won't be as good then. So I think that, if you want, you can just wait until 5 or 10 years down the road when it's mainstream, super easy to use, but you won't see the returns. If you do the work now to try to understand it and figure it out and start buying it now, you probably will see the returns. So, obviously do your own research. Don't take my word for it. Look at the resources I put together in the guide and go down the Bitcoin rabbit hole. I think the sooner you do the work, the more you'll be rewarded for it. So this guide I put together, there's basically 2 parts of it. So one is resources to learn about Bitcoin. I put together, basically a bunch of books and podcasts and videos that will help you learn more. You can just kind of go through it, and whatever sounds interesting, you don't have to necessarily go in order, but whatever sounds interesting that you want to learn about, click on it, learn from it. And then the part 2 of the guide is how you can start using Bitcoin. So how do you create a wallet? How do you buy it? How do you hold it? How do you send it? Etc. And if you want, there are some services out there now where you can earn interest on your Bitcoin savings. So I put some of those in there too. This video does not at all fully explain Bitcoin. I mean, it's just too complicated for that. But I tried to summarize some of the key aspects of Bitcoin and then why I think it's important. This is just the beginning of learning about Bitcoin. I do have some other future content planned already that I've kind of been thinking about. So this might be some of the other things I do in the near future. The last 2, I actually need to do a lot more learning about it before I'm ready to talk about it. But some of these other ones I'm probably going to try to put out soon. Anyways, I hope you enjoyed it. I hope you take the time to go through the guide and learn as much as you can. And, let me know if you have any questions. But stay tuned. Peace.